Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Michael Kurzer. He's a partner with technology transactions and intellectual property at Vinson and Elkins. We're going to talk about global sales of electric vehicles having doubled in 2021 over 2020 and why effective and reliable charge infrastructure will be in high demand. And it's so interesting, Michael, and it's great to have you at MarketSite. Welcome. You focus on intellectual property exclusively. And when we think about EV, it's always where are we going to invest? Do we have the infrastructure? Your specialization, again, IP, how does that fit in the EV ecosystem?
Yeah, so first of all, thank you for, Jill, for allowing me to speak here today. So so I'm an IP transactions lawyer. What I do is I evaluate risks, IP risks, those or technology-related risks as part of investments in technology, which in this case, EV technology is one of those areas in which I would be looking very carefully. We do a lot of these deals at Vinson and Elkins. It's a kind of a top priority these days.
What does the EV charging station business model look like? Yeah,
so it's a varied model. It's unlike gas stations where it's a very simple model of they're buying gas and they're reselling it at a markup. EV is a mix of a lot of things. It can be subscription based, and that means somebody pays a monthly fee and gets some amount of charging time, perhaps. There are regulations which prohibit, in some states, the ability to sort of mark up electricity that's coming off the grid, and just to have that as a business model, it may not even be possible. So, so they're looking for creative ways to do things. So if you look at Tesla, what they have is, they're offering EV charging, but they're not doing it to make money off of EV charging, at least not yet. They're doing it to sell cars. So in the beginning, they offered, a lifetime free charging, and they've sort of changed that a little bit to basically at cost charging, but they have an exclusive network of charging stations which are available only to Tesla customers, and so it could at some point become a model where they're making money off of EV charging directly, but right now it's a business of selling cars. Right.
So how do EV charging companies differ?
Yeah. So it all sort of depends on what their objectives are. So I think for example, a company like ChargePoint, I think they realized early on that they didn't want to be in the business of what they're trying to do is they're trying to they want to make money in EV charging, but the marking up of electricity, as I explained, if it doesn't work in all 50 states, how do they sort of work around that? And so they came up with a creative solution of just basically offering as a package deal, offering charging services and maintenance of charging stations, which is sort of almost like a turnkey option where somebody can operate that as a business, but there's this other service provider that's coming in and making money on service fees as opposed to actually per use charges or subscription charges on EV.
What areas of EV charging stations look attractive for financing?
Yeah, one area that we're sort of focused on, at least lately, is what you want to have in any sort of financed investment is kind of a regular cash flow, a stream of cash coming in. It's kind of tough in the EV space because if you don't have the price of gas is moving, whether or not the price of electricity is moving, all of these things that might adjust what you're going to charge are fluctuating. You don't necessarily have a long-term guarantee of cash flows coming in. So one thing that that we've looked at in the space is where are areas where somebody uses a lot of EV vehicles, like fleet financing is an area, and so that could be municipalities like buses or FedEx or somebody like that with a number of vehicles or something that need to be charged. Well, when you have a kind of a large number of vehicles that need to be charged, then that can kind of set forward over time. Okay, what's going to be the flow of cash coming in for that type of activity? That allows for a better sort of picture for being able to finance and have receivables. The other, I don't know, just to get into why they might have to look at this type of a thing is, so when you don't have a regular cash flow coming in, and you don't have I guess the other thing they don't have is an interest in real estate interest in the property where the charging stations is taking where it's taking place, is you got to have some other type of thing for the the finance or the bank to hold on to, whether it's a security interest or some kind of a regular payment. They want to have some collateral for for what it is that's for the activity.
Right. So explain to us how Vinson, Elkins, how do you work with client transactions involving EV-focused companies?
Yeah. So the general sense is that there's a deal that's happening. There's some type of an investment that's taking place. There'll be a team of specialized lawyers, and myself, I'm sort of I'm one of these sort of specialists, and in particular, my specialty is in IP. So when you look at a company and an investment, they might have patents, they might have trademarks, they might have copyrights and domain names, whatever it might be. So I would be looking at those things and saying, okay, well, how does that, have they sort of done the basics? Have they paid their maintenance fees on their patents? Have they do they own their patents? Do they have agreements in place with their inventors in order to assign the IP back to the company? All of those things would be important when we're looking at an investment. And in the EV space, it's a very, what do we call it, new, nascent, early, early opportunity kind of a business. What you have here is you don't generally have like a heavy patent portfolio established company that we're looking at. We're usually, we're looking at a young company, and so there could be a lot of sort of things that they haven't sort of taken into account, in the beginning when they're setting up their business, and so we point those risks out, try to address them as part of the deal.
Let's wrap up with the Build Back Better Act. I mean, it's largely been abandoned. If Congress could find a way to pass a version of the bill, how do you expect it to impact the EV space?
Yeah, so government subsidies are, actually been a significant part of how the existing. So we have Tesla with their, with that model, but there's also this sort of government subsidy model, which kind of exists in the background and perhaps could have been furthered with Build Back Better, still to be seen. But so I think the plan there was they were going to put together 500,000 or some massive number of charging stations at it cost billions of dollars. Part of it, of the issue here is inertia and getting, having stations out there where, where people have an opportunity and they're not going to get stuck in between a station.
I mean, you could produce all the cars you want, but if you don't have the EV infrastructure, it's kind of like.
So the idea would be to sort of, get things rolling with the EV charging stations. Then there'd be more of incentive for people to buy cars. Looking forward, I think. There are good things and there are bad things from that. The plus might be that, businesses might say, okay, well, I'm not competing with, a large government operation that could have, potentially, lessened the amount of money I could make in my business. On the other hand, it may slow the development of EV, just overall. So I'm hopeful that there'll still be something that's put together in that space.
All right, Michael, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.